Hello, we would like to consider prepayments or advance payments as part of our adjustment of entries. Okay, so in preparing our financial statement, in determining our profit or loss, we match all the expenses against all the revenues for a particular accounting period or a particular accounting year. In preparing your financial statement, the accounting period under consideration is so important. That is what we use to determine whether a payment has been made in advance or there is an outstanding or arrears in that a particular accounting period. Sometimes when we are preparing our profit and loss, there are some payments that may be made in advance, and there are some payments that may be in arrears, and there is the need for us to make adjustments to these payments in order for us to determine the payment that actually relates to the accounting period that we are considering. So, for instance, if we are determining our profit or loss for 2022, then any payment that relates to 2022 will be matched against all the revenues for 2022 in order to determine our profit for 2022. Any other payment, any other revenues that we get outside the particular year that we are considering will not be taken care of. So let's say if we make payment for 2023, then that payment should be taken out of our expenses for 2022. And if there are payments that we made for last year, then that payment will also not be considered when we are preparing our financial statement for this year in terms of our profit and loss. So what then is prepayment or an advance payment? Prepayment is just any payment that we make for more than 1 year, for more than 12 months, for more than one accounting period. So accounting period is a period of 12 months. So any payment that we make for more than 12 months, that additional payment after the 12 months becomes the prepayment. So if you make a payment for 3 months, 3 years, then that 2 additional years becomes our prepayment. If you make a payment for a period of 13 months, then that one additional payment becomes our prepayment. So let's look at this. So simply means prepayment is just payment for more than one accounting year, for more than one accounting period. Okay, so if you make a payment for 15 months, the entire 15 months does not become the prepayment. It is the 3 months additional payment that becomes our prepayment. Okay, so a typical example is in the case of rent, where you go and rent an apartment and the landlord will ask you to make a payment for 2 years. In that case, the landlord is asking you to make an advance payment, to make a prepayment. So accounting is saying that if you make an advance payment, that advance payment should not be considered in determining your profit and loss. It is only the payment that you made for this year that should be considered. So let's say your landlord asks you to make a payment of $2,000 for 2 years, and your rent starts this year. In accounting, you only report $1,000 for this year, and the remaining $1,000 is for the following year, is for the subsequent year, because we are saying that if you want to determine our profit and loss, then all the expenditure that relates to this year should be matched against the expenses for this year. So that additional $1,000 is not for this year, it's for 2024, because we are in 2023. and we have to only consider the expenses for 2023. So let's look at this example. Okay, so this is a rent prepaid question where in 2022, the rent paid of 1,500 was for 15 months period ending 31st March 2023. So 2022 from January up to December is 12 months. And that is what we need to consider. But then they said that the rent that we have paid also covers some part of 2023 and it ends at March. So it covered January, it covered February, and then March of the following year of 2023. Okay, of the following year or of 2023. So it means that when we are determining our profit and loss for 2022, it's just the expenses for just 2022 that we need to consider. We don't need to consider the subsequent period. So all we can do is just to divide 1,500 by 15 months so that we know our monthly payment. So 1,500 by 15 will give us 100. Okay, so it means that every month we are making a payment of $100. So $100 by 12 will give us $1,200. Okay. And the $1,200 is what we can report as our expenditure for rent for 2022. The $300 for the 3 months additional, for the 3 months which relates to 2023 is not for this year. So we need to consider that when we get to 2023. Okay, so that is the rationale behind we adjusting prepayments. Okay, so this question 1,200 will be reported on the P&L or in a P&L as our expenses for rent. And then the 300 cedis is an advance payment. When you make payment in advance, it's like an asset to you. Let's say when you decide to leave the apartment at the end of 2022, you can go for your 300 cedis, sorry, your $300 because you have not consumed that benefit. You have not utilized that benefit. So you can go for the 3 months. But at the end of 2022, you can't go for the 1,500 because you've lived in the apartment for 12 months and you have utilized the apartment for 12 months. So you can only go for the benefits that you have not enjoyed, and that is your prepayment. Okay, so thank you very much for watching this video and drop your comments in the comment section. All right, thank you.